Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXM. I want to welcome everybody to the Daily FX Walkthrough. We're going to get started in just a moment. What I'm going to do tonight is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX.com, and usually the first thing I do when I get there is I scroll down to click on Jamie's report. So let's see what he has to say today. Patterns in the Aussie and Kiwi suggest that large rallies are underway. The euro-dollar is not as clear, although holding last week's low is bullish as well. So what I'm going to do right now, I'm actually going to jump straight to the charts, as there are a bunch of charts that I want to get to tonight, including the Kiwi dollar, as that has been introduced by Jamie here, and it's something that I've been watching. So let's go ahead and pull up the charts. And the first chart is the euro-dollar, and if you recall, initially I was holding a slight bullish bias against that 61.8 fib. We did get an initial rally off that, and it looks like prices have found support at the 78.6 fib, and there's been a fierce rally. Now, if this, in what Jamie's calling for now, if this is a three-wave correction, which bottomed here at about 125.25, and we could see clear three waves down, A, B, C. This could be the start of the third wave here, of what might prove to be just an A wave. So that's something to keep an eye on here. Unfortunately, this is a massive rally that we have here, about 400 pips or so. So it's going to be difficult to find entries. So what I would do is just keep an eye on Jamie's reports, look for clear support levels on which to enter. Unfortunately, we can't draw a simple support line. I mean, we can, but prices are too far above that right now for that to be relevant. So what I would suggest is just keep an eye on Jamie's reports, and if it is a third wave, we should expect more gains, at least up to this level here, which is near the 133 figure. So the next chart that I want to discuss is the dollar-yen, as that's what we have been focusing on here, and we can see that if you recall during yesterday's report, this is a resistance line I've been using for the past several reports. I mentioned that I was expecting an upside breakout, which we did get, and during yesterday's report, this is the candle that we were trading at, I believe. Actually, it was this candle here. Excuse me. So this candle here that we were trading on, and I mentioned that if prices were able to close back above the line, I'd maintain that bullish bias against this former resistance line, which now is clearly acting as support, and that is what happened. So hopefully you enjoyed a little bit of that rally. But now, obviously, we should keep an eye on Jamie's reports. This is a counter trend rally, and Jamie is very bearish on the dollar-yen. He's been spot on with his analysis. So, certainly if you did enjoy a rally off that former resistance line, now support, I might take a little bit off the table here and wait for another opportunity. Speaking of other opportunities, if you recall, I believe it was in last week's report, I'm not sure exactly which day, I was mentioning the the very long candle wick in the euro pound, and how we might keep that on the radar screen and wait for prices to come up and approach that, and that's what seems to be happening right now. Now, what I would suggest, the high on that candle, 81.95, I would maintain a slight bearish bias against that 81.95 high if you can get an entry close to that level. Now, of course, anything can happen, so we have to be prepared if there is a breakout to the upside here. The trend has obviously been strong in the euro pound to the upside, so that's something to look for. With that being said, there is a good risk-to-reward trade that could set up, but just make sure your entry is close to that 81.95 high. And this is a situation where I would exit immediately on even just a brief move above that 81.95 area. The last chart that I want to mention tonight is the Kiwi dollar. As Jamie has mentioned, the Kiwi dollar, he's bullish on the Kiwi dollar, and we can see that there has been a fierce rally in the pair. So what we might do is draw a simple support line on the pair, and now just wait to see if prices can come down and test that support, so we can get a good risk-reward entry, and we know where to place our stops. Another factor in the Kiwi Kiwi dollar, if I can go back to DailyFX for a second, is the SSI, one of the best indicators that you can use in foreign exchange, and this is DailyFX Plus. If you give me one moment here while this loads, and DailyFX Plus, and then we can click on the SSI, and that should pull up the most recent report. Sorry, I'm having a problem here with my mouse. And one of the main reasons why, Jamie's bullish on the pair, but also we have a very negative ratio with the SSI on the Kiwi dollar, and that is a bullish signal. So that's another factor to think about. But SSI is not something, it's not next day service. It's something that we should just keep an eye on. And as I mentioned before, just keep an eye on opportunities to buy the Kiwi dollar. But again, we should have solid risk-reward entries in the trade. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.